So, and gold is a bit different because it's a currency. It does have some industrial application. It's used in cell phones. It is used in EVs, but to a smaller scale than what, say, nickel or cobalt or copper is. But it's still an important component, and it's definitely used as a currency. So I think people say, "Oh, if gold goes to 2,100 or 2,200," no, I think it'll go materially higher than that. And in some parts of the world, it'll be used to back their currency.
Welcome back to the Money Seed Podcast. My guest today is Jonathan Awde. Jonathan is the president and CEO of Dakota Gold, and he is revitalizing America's largest gold mine with his responsible gold exploration company. Jonathan, welcome to the show.
It's a pleasure to be here. I really appreciate you taking the time. Thank you.
John, it sounds pretty exciting. The largest gold mine in America, the Homestake Mine. Tell us more about it.
So this was a mine that was in production from 1876 to 2001 and produced 40 million ounces of gold. So it's still the largest single gold mine in the history of the U.S. I mean, there are larger mines today in Nevada in the Carlin Trend that belong to Barrick and Newmont. But it was a mine that built Homestake into one of the largest gold producers in the world. And Barrick Gold acquired Homestake in 2001, and right away it put the mine in Leeds, South Dakota, into their closure group. And we actually acquired a number of assets from Barrick out of their closure group in 2020, and then have grown our land package from 5,000 acres to almost 50,000 acres. And so it's been a pretty busy few years for us, and we're excited about what's happening in the district.
So you are the president and CEO of Dakota Gold. So tell me, what exactly does Dakota Gold do?
Yeah, so we are really revitalizing the Homestake district. One of the transactions that we did with Barrick, it gave us 125 years of data. So, when Barrick acquired Homestake, a lot of that data was in analog, was in paper format. So we've digitized everything, and that's been hugely informative for us to acquire and grow our land package from 5,000 acres to 50, but also has led to two discoveries at our Maitland project, which is contiguous with the old mine. And it's helped us come out with our maiden resource at our Richmond Hill project, which is a mile to the west, which is actually coming out in March. And again, we've got 4 drill rigs active. We are South Dakota gold exploration and development company with a very specific focus of revitalizing the Homestake district in Leeds, South Dakota.
And are you actively doing the mining yourself, or are you more on the exploration side?
Right now, it's exploration and development. We've got these 2 exciting projects that our 4 drill rigs are active right now, and our Maitland project, which is immediately contiguous with the old mine. We've made 2 new discoveries in the last year and a half on our Maitland project, and it looks like it's either an extension of the old mine or new mineralization that we've discovered. And then at our Richmond Hill project, there's 800 historical drill holes. We're compiling all that historical data, and in addition to the drilling that we've done, coming out with our maiden resource. So it's really exciting, and it's important to note that everything we're doing right now is on private ground. So, and I say that because there's a strong narrative in the U.S. that permitting can be very challenging. And it's true, it can be. And it gets more challenging when you're on BLM, which is Bureau of Land Management, or U.S. Forest Service. Now, we do have some ground on BLM and U.S. Forest Service, but roughly 1/3 of our 50,000 acres is on private ground. And that's where all of our activities are going on right now.
And I've seen the phrase responsible gold exploration being used. Can you tell us a little bit more? What does that actually mean, responsible gold exploration?
Sure. So, with Dakota Gold, it's really important for us to leave things better than we found them. And, mining, the whole mining industry certainly gets a very negative name for, scarring the environment. So we drilled, 140,000 feet last year. So call it 45 or so thousand meters. And we only had net disturbance of 5 acres. So when we build a new drill pad or a road, we reclaim a lot of that as we go along. And a lot of what we're doing is in previously disturbed areas. So we're actually repurposing previously disturbed land and improving it as we go along. And that's been hugely helpful, in the community of Lead, Lawrence County, and it's allowed us to garner, some pretty solid support locally to do what we're trying to do.
Jonathan, you are listed on the New York Stock Exchange under the ticker symbol DC. Tell us a little bit more about how should people value or how should people analyze exploration companies?
Yeah. So look, full disclosure, it's a challenging time for the gold industry. There's still rampant inflationary pressures, supply chain issues. And when people see gold at 2030, 2025, where it is today, they say, oh my goodness, the gold miners must be printing money. And there is significant free cash flow generation. But what a lot of people need to understand is that the cost to explore and develop and produce and reclaim an ounce of gold has risen faster than the gold price itself. So it's actually a really interesting time to be looking at the gold industry, in my opinion. There's at some point in the next year, year and a half, the Fed will pivot and will likely start to cut interest rates. When that happens, the US dollar will likely, come off a little bit, and it should be really bullish for the gold price. And I think that there's a gravitation towards owning companies with assets in good jurisdictions where rule of law applies. So the US, Canada, Australia, and that's really what we're focused on. So I think it's, while it's been a challenge for some of the producers to keep their costs at bay, being an exploration company, year over year, our drilling costs are kind of flat. We've had to grow our team because we're doing a lot more. But South Dakota is just a fantastic place to be operating. Great, skilled, loyal, committed workforce. So while exploration risk on capital is the hardest to raise at this time, in the last year we've been able to attract Orion Mine Finance, which is one of the largest, if not the largest, mining private equity firms in the world. Fourth Sale, which is a large mining fund out of Sao Paulo in Brazil. They bought 5.5%, and then 1832 out of Toronto. Very selective fund manager, very very smart, and management still owns 25%. So one of our co-chairs, Dr. Robert Quartermain, is in the Mining Hall of Fame. He's founded two $3+ billion companies. One is called SSR Mining. It was Silver Standard for 25 years. And the other is Pretium, which was bought out by Newcrest. And Newcrest was bought out by Newmont. And that was a real lesson in applying, cadence, alignment with shareholders from discovery to gold pour in under 7 years. So unheard of. Our other co-chair, Steve O'Rourke, ran global petroleum for BHP for a number of years. So we've got a great team, and we've got a lot of insider ownership, which is really important. And, it's exciting times for us.
And I know that you probably shouldn't give out forward-looking statements or put a huge asterisk next to them, but what does the outlook look like for you guys?
Well, naturally, I have a bias given that I am the CEO and the second largest shareholder, but I like what we're doing. I mean, I really like the exploration results we've had at our Maitland project. We've talked about this JB zone, this JB discovery, which is in Homestake formation, which is in the same host as what Homestake was mining from for 125 years. High grade gold. We had our highest grade intercept that we announced 2 weeks ago. That was 4.87 ounces per ton. So very, very high grade. We have a new discovery type in our Unionville discovery, which is in a younger package of rocks. And that's new and that's exciting. And then at our Richmond Hill project, we're putting together a resource, which I think will probably surprise some people. And again, being able to do this kind of work on private ground, we're relatively well financed with 26 or 27 million US in cash. We've got these 4 rigs active. So I like the position that we're in. We don't need to raise money. And I think we're really starting to be able to sharpshoot with our geological model And it's a real testament to the work that James Berry, our Vice President of Exploration, is doing, and Jerry Aberley, our Chief Operating Officer, who was the last mine manager when the mine shut down. So we have excellent, technical guidance and leadership from Jerry and James.
Typically, when people invest in gold, they often think about just buying a mutual fund like GLD, right? Or investing in the gold miners ETF or something similar. Where does investing in Dakota Gold fit on the risk return paradigm?
Yeah, so it's a great question, and maybe I'll answer the first part of it, first. So investors have a lot of choice when it comes to getting exposure to gold, right? So you can actually buy the physical. So every month I buy, coins or small bars. Some months it's more, some months it's less. So that's one way to get exposure, and then you got to figure out where you're going to store it, cost to insure it, all that kind of added costs. And then if you want to have exposure to any one of the ETFs, there's a GDXJ, which is a smaller composition of producers and explorcos. And then there's the GDX, which is typically the mid tiers and the bigger companies. And there's the GLD, which is obviously backed by physical gold. So those are three kind of clear ways to get ownership, and all of those carry risk. A lot of these trade with the price of gold. So if gold's going up, the equities come up. And typically it has an inverse relationship with the US dollar. So because the US dollar has been strong, there's been outflows from these ETFs. I am of the view that higher for longer is probably here because you have mixed economic data. But the longer the Fed keeps rates at 5.25%, with $34 trillion in debt and counting, the cost to service your debt is now outweighs and exceeds U.S. military spending. Then when you're running $2.5 trillion a year in deficits, so you're at $3.5 trillion in debt every year. And if you can't balance a budget with sub 4% employment, labor market tight, the broader markets at all-time highs, strong, stubbornly strong real estate market, and things actually were to get worse, it's going to be interesting. So I think at that point there's going to be a real inflection point for gold. And then for the exploration companies, again, they obviously carry the most risk out of gold producers. But again, with gold producers, so if you're building a mine in the last couple of years, most mines have seen significant capex blowouts. So let's say you said, okay, to our investors, our shareholders, it's going to cost $500 million to build this mine. Most of them end up being $1 billion. Whereas an exploration story, we can stop drilling. And if you're disciplined and you understand cycles and you understand that this is a business, you can stop drilling. But when you make a discovery, then it's about bringing in additional rigs and moving that along with a cadence to get to a maiden resource, to economics, and then look at how long it will take to permit it. So yes, there's risk in every sector of every industry. And I would almost argue more in an environment like this, for the right well-funded exploration story, that there is the same level of risk as if you're building a mine or if you're operating out of a country where rule of law applies, because governments are doing silly things. They want a bigger piece of the pie. They can move the goalposts without any consequences. So it's I think it's a really interesting time to be looking at the gold space. And in my humble opinion, I think every investor should have some level of gold exposure in their portfolio, whether it's 5% or 3%, 10% in that kind of range, depending on your age, your time horizon, and your appetite for risk.
Jonathan, you mentioned already the interest rate and you mentioned government deficits, but what other economic data do you really look out for when you're trying to guess where the price of gold is headed?
Well, I love technical analysis because it doesn't care what you think or see or what I care what I think. It's all incorporated in there. And it really is helpful when you're looking at trends and kind of when to enter and kind of where you are in the cycle. So I really follow technical analysis. The US dollar is a big one for me. And just we're seeing, you still are, seeing sticky inflation. And in Canada, we have variable rates, right? So every year, 20% of mortgages come due and have to be,
Mhm.
readjusted. So we're in a different situation. While we do put more money down when we buy a home, we don't have 30-year fixed mortgages. So, I have a friend who just built his dream home. It's a gorgeous home, and he took out, a meaningful mortgage to get it done. The variable mortgage didn't lock in. His mortgage rates have now over 2.5 times what he's originally paying. So it's really eating into a lot of cash flow, people's cash flow. Um, but there's another major, change and shift that's going on in the world right now, and that's this de-dollarization. So when Russia invaded Ukraine, the US put certain sanctions around Russia and kind of gave, a playbook. And I'm not going to get into politics and military, but kind of gave other countries a bit of a playbook as to what could or would happen if somebody went against the interests of the US or other G7 countries. And again, it was horrible what happened, and I'm not, but so you're seeing, India, you're seeing China, you're seeing all these BRIC countries look at trying to settle transactions in something other than the US dollar. So the challenge is there aren't many other alternatives to the US dollar. So the US dollar will reign supreme for several decades. But I think every year you'll see 1% or 2% shaved off global transactions settled in US dollars. Um, and I think gold is going to play a role in that. And, so for me, the labor market's very important, and then when you take out, the sort of magnificent seven, the tech stocks, where's the market? Microsoft's got a $3 trillion valuation now. NVIDIA is at 1.6. Apple's almost 3 or is over 3. So, there's $7.5 trillion in the US right now in money market funds. If rates do come off, that money's going to have to go somewhere. It's going to want, and now maybe it goes back into equities. But I think that you will see some of that go into commodities, and that's the challenge. Everybody wants an EV. Everybody wants to decarbonize and get to carbon neutral and electrify. But the only way we get there is through mining. The only way. The recycling market is not, it's like shooting an elephant with a BB gun. It doesn't come close. So, and it's more severe in the base metal market. So copper, for example, the largest copper mine in the world is called Escondida. It's in Chile. This is it took 15 years from discovery to production. The world needs a new Escondida every year to come online to meet the copper demand. So, and gold is a bit different because it's a currency. It does have some industrial application. It's used in cell phones. It is used in EVs, but to a smaller scale than what, say, nickel or cobalt or copper is. But it's still an important component, and it's definitely used as a currency. So I think people say, oh, if gold goes to 2,100 or 2,200, no, I think it'll go materially higher than that. And in some parts of the world, it'll be used to back their currency.
Jonathan, on a personal level, tell us a little bit more about how you got involved in this business.
So when I graduated from university, I started out at a brokerage firm in Vancouver called Wolverton Securities, which has since been acquired by a larger brokerage firm. And it was a family-owned brokerage firm that focused on small cap metals and mining. So once I completed the investment advisor, rookie broker training program, they put me in an office with two veterans who did just that. They financed and invested in small cap metals and mining, and I was fascinated. And it was an early part of the cycle. So this was my first year in the industry was '99, but I got my license in 2000, and then I was on my own in 2001, and it was a great time to be looking at metals and mining because gold was under 300. There were super suppressed industry. A lot of companies put mines on care and maintenance. So if you had capital and were looking to deploy, it was a fantastic time to be looking at investing in the gold market. I mean, some of these stocks went up 20, 30 times over a 10-year period. So I think that same setup is here for where equity prices are. It's the biggest disconnect that I've seen in 24 years of doing this between where the metal prices are and where the underlying equity prices are. Balance sheets are way better. There's way less debt, and there's definitely a more disciplined approach to M&A. There was a lot of destructive, M&A that was done in the last cycle, and the active fund managers have reminded mining companies to be disciplined, have alignment, and don't overpay for things. So that's been great. So that's and then I founded a company in 2009 called Gold Standard. So I was the CEO of that, and that sold to a bigger company called Orla. And I met Quartermain in 2010, and in late 2018, early 2019, we talked about doing something together, putting a company and looking for an asset. And he had come off Pretium that was bought by Newcrest, and Gold Standard was bought by Orla. We put a bunch of money into a private company, and we looked for opportunities. And we came across this opportunity, and what really stood out for us was an opportunity to be first mover in the district and to go from 5,000 acres to 15, to think big. We've raised just under 120 million US since we were private. And, we think it's just a phenomenal place to be. It's extremely fertile. You can permit, you can get things done. You've got a supportive local community, great workforce. And the fact that we were able to get Jerry Aberley and James Berry from the old mine, from Homestake, that worked in the old mine, that experience and that technical expertise is really irreplaceable.
What advice would you give to any young listeners who have dreams and aspirations of becoming CEO or of owning their own company?
Well, where to begin? Look, there's so much chatter and noise and social media and online. Follow your dreams and don't get discouraged when someone says something stupid because they think they know you or they read you and they're totally wrong. Use that as fuel, use that as motivation. It's easier said than done because no one likes being called all these things, but use that as fuel and motivation. Get a mentor as early as you can. And if you want to be an entrepreneur, just know that when you're starting and you're building your company, it's 24/7. And, it's really tough to have a family and to build a company unless you have an extremely supportive partner. It's tough. And, everything that goes on, good or bad, is usually a direct result of decisions you made or didn't make. But having a mentor very early on is super important. And if you have a business partner, make sure there's a really good yin and yang. Make sure that you have that alignment and you can communicate where you can be transparent and not have someone get all sensitive and pout. That's really important. So if you want to be an entrepreneur, follow your dreams, think big, and it's totally possible. Learn from your mistakes. Mistakes are not failures. It's one step closer to success. And just have that perseverance, have that grit, have that tenacity.
Where can people go to learn more about you and Dakota Gold?
Look, our website is a fantastic resource. There's a lot of information on what we're doing, on the industry. And look, I'm a large shareholder, and I highly encourage anyone who has an interest in what we're doing or a company. All of my contact information is on our website. Email me, call me. I will take as much time as I can. And the only way you learn and grow is by asking questions. So highly, highly recommend going to our website. It's a great resource. And again, all of my contact information is on our website. That's a great way to get more information on the company or myself. And we are a collection of owners, so we are principals. And I keep harping on that because there are a lot of management teams in the mining industry or different industries that don't have any skin in the game. So I think when you're looking at investing in earlier stage companies that do carry risk, investing with management teams that have had successes before or have a lot of skin in the game is really important.
Jonathan, thank you very much for taking the time to speak with us today. And yeah, looking forward to hearing more about Dakota Gold in the future, and best of luck with the Homestake project.
Thanks very much. It was a pleasure.
Hey, thanks for joining us for another episode of the Money Seed podcast. please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.